Hello, friends. Today we're taking a look at Starbucks Corporation, ticker symbol SBUX. We'll be looking at the stock performance in the last 5 years. We'll look at the latest earnings report, and then we'll jump right into the fundamentals of the last 10 years and try to find a fair value for this company. Starbucks is a very beloved company for dividend investors. It does pay a dividend of $2.28, which will be about a 2.9% from current prices. Analysts are thinking that there is an upside for Starbucks of 23%. Their average target price in the next 12 months, it's somewhere around $98. And if we look at the chart, last 5 days is up 1.5%. In the last month, it's down almost 12%, but it has been recuperating since somewhere around May 8. It has gone up about 10%, 8% after a big drop of almost 15% after earnings. Year to date, it is down 17%. The last year, it has been a drop of 20%. And if you see in the last year, it has been somewhere around the $91 to $103. So the target price of the analyst is not super crazy. And in the last 5 years, it is flat if you bought it 5 years ago. However, this is a stock that it seems to be something that maybe you can trade on bad news. I know that around this time there was a lot of issues with the unions, and this is where a lot of stocks went down. Then it recuperated, stayed a little flat, and as you can see, it has been dropping. Part of, at least what I've been reading, is a lot of the issue seems to be that a lot of people are downgrading. They're not spending as much money in Starbucks, and Starbucks is not following what other corporations are doing on trying to offer some discounts. They still charging full price. I know Walmart has been trying to, and Costco and other places, they have been trying to bring prices down. Starbucks, they think that they still can price people, and this is a little bit of a challenge right now. Analysts think that they're probably thinking too much about their own brand, and they are having an issue with branding. So that is one of the issues there. As you can see, analysts believe that it is right now a buy, which makes sense. Being almost $80, there is an upside of almost $20 for Starbucks, based on the analysts. And when we take a look a little bit closer to the earnings report, analysts were thinking that they were going to report somewhere around 80 cents of EPS, and they actually reported 68 cents. That is a 12 cents drop, or about 15%, which is about what the drop of the stock was on that day. So from there, it has been recuperating a little bit. But whenever we look at the upcoming earnings report, they are hoping, the analysts are hoping that they will report a 94 cents EPS, which will be 14 cents more than what they expected. That would be almost a swing of $26 since the last reported. That's quite a big jump, and they have been having they have 26 revisions in the last 90 days, and all of the revisions have been down. So what's going on with Starbucks? Let's jump into the financials of the past 10 years. But before that, I just want to encourage you to subscribe and leave a like if you are enjoying this information that I'm giving you. Also, if you have any comments, please just write them down. Let me know what you think about Starbucks. Let me tell you, share with our community if there is anything that I'm missing, or a reason why you're bull on this stock, or maybe you're bear on this stock. So just leave a comment below, and I will really appreciate any comments down below. When we look at the earnings the past 10 years, this is pretty nice. As you can see, it has been growing steadily. In the last 5 years, it has grown 8.4%, but in the last 10 years, 11.12, which is great, but it also means that it's slowing down a little bit. Gross margins are at 70%. That is a really nice number. When we're looking at the earnings are a little bit all over the place. The 2020, of course, that a lot of restaurants had issues. But if we were to just eliminate that, we can see that even though it goes up and down a little bit, and there's a little bit of inconsistency, there is a natural trend of growing. In the last 10 years, they were growing really nice at 10.4%. But in the last 5 years, they have remained a little, the growth of the earnings have slowed down at somewhere around 4 to 5%, which is not the best. Actually, I will even say that probably remains flat since 2018. Free cash flow also kind of growing. It is good that since 2014 they have remained positive on their free cash flow. Even 2020 they got really close to zero or negative, but they didn't, so that's pretty good. You see a couple of jumps on free cash flow, but if generally speaking, you can see that in 2015 they were from $1.64 all the way. Now they're making somewhere around 3.3, 3.4, almost doubling. So that's a really good, nice growth in the last almost 10 years. It doesn't calculate here very well because of the big drop that they had in 2014. So, but in the last 5 years, they have flattened down a little bit. So they're about 5.6%. Margin, free cash flow margin average is at 10%, which is a little low for me. And the free cash flow yield at this moment, on average in the last 5 years, is at 3%, which is pretty nice. Book value, this is quite a mess. This is a reason why I would be very, very worried on investing with Starbucks personally. I might consider it as a trade, and that's something that I'm kind of thinking about. When it comes to dividend has been growing pretty nice. Last 10 years at 15.5% CAGR, while in the last 5 years slowed down a little bit, which that's okay, at 8.8% year over year. CAGR, and the payout ratios is right now at 62%, which is really good. When it comes to debt, they do have quite amount of debt since 2020, and this is part of the problem, and it has been hitting, of course, the book value. If we were to take the average 5-year free cash flow, it will take them about 8 years to pay all their long-term debt. When it comes to shares, they have been buying nicely at 2.9%, but if you can see, it has been slowing down in the last 5 years at 1.64%. So we're going to be trying to figure out a fair value. I just want to give you a little disclaimer. I am just a YouTuber. I'm not a financial advisor or a licensed professional. So just remember that everything that I'm sharing over here is just my opinion. And I would love to hear any of your opinions too. But this is just for entertainment purposes. I'm not giving financial advice, and just make sure that you do your own due diligence before you buy shares on Starbucks. Historical multiple valuation, whenever we look at the average and the trailing 12 months and multiply it by the mean of the last 5 years, we get all of these numbers right here. As you can see, you can pause the video and look at all the different numbers. But when we look at an average of all of them, it gives us a fair price somewhere between 93 to $116. When we use the revenue-based valuation, we look at 5 years and then discount it back at the 15% discount rate that I like. It tells me that a fair value to buy today Starbucks will be somewhere around 88.5%. Looking at the discounted earning valuation, we're looking at a price of, once again, I am growing it at 5%. I know that some of you guys may think that this is pretty low. I think Yahoo analysts think that it will be growing at 7 to 8%. But when I'm looking here at the earnings growing at in the next 5 years, the last 5 years at 4.5, and then in the free cash flow somewhere around 5%. That's why I'm using a 5%, but with a 30 PE, it gives me an average of $55 to $69. Using the payback time valuation, growing it again at 5%, it gives me somewhere between $57 to $77. Using a discounted free cash flow, only looking at the next 5-year growth, and then imagine that we sell it 5 years from now, growing at a 5%, using a 30 times free cash flow per a free cash flow multiple, it gives us a price of somewhere between $62 to $82. Owner's valuation, once we put all the numbers, it gives me somewhere between 103 and 120. I will probably actually, I think this is a little high, but I will leave it. When we put all the numbers together, it gives me a fair value using our 5-year average of $77 and a trailing 12 months of 92.2. And so if I were to invest on Starbucks, I will think that a fair value will be somewhere here in the average, probably $85. Because of the big swings, I will probably want I would say, 30 maybe is too much, maybe a 20% margin of safety. So I would be happy if I were to buy it somewhere around the $70, taking that risk and thinking that maybe it will go back up to the 100s. So that is my opinion. I may be wrong about this. I would like to see what the CEO wants to do. It seems to me that it's a little bit all over the place, and Starbucks is more of a how do you call this? It's more like a luxury kind of coffee. Let me know what you think. If you're thinking about maybe buying this for the trade, I have done some trade plays and they have worked out really good. So let me know what you think, and thank you for joining us, and I hope to see you in the next video.